Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles. Today we're going to be talking about the ES and the NQ. We're going to be focused on what they are doing intraday and how we can make money off the opportunities that the market-generated information presents us. So right out the gate this morning, I see there being a lot of opportunities in the market, right? We have been in balance for the last 4 days, balanced by a pin. So we are either going to today break away from that balance and start to create momentum to the upside, or we are going to return back to that pin. We are going to return back to the middle of that balance area. So very simplistically put, today the market should either head up for this volume point of control at 6,005, okay, which is untested, or this volume point of control down here at 5,900, which is untested. One of these two levels should be where the market is going today. Now, does that mean the market can't go sideways and not get to either one of those levels? Of course, it can always do that. But in my mind, it is that simple of a conceptual idea that either we are breaking out of this balance and we're heading back up, or we are failing to break out of that balance and we are heading back down. So this market today is presenting us with a lot of opportunities because there's a gap. Whenever there's a gap, there's opportunities to take trades based on the gap, whether that is a gap fill or a gap and go trade. And then beyond that, there are opportunities for momentum. So if we get the gap and go and the market pushes above the overnight high, pushes above 59.74, and it starts to find support up there, that's bullish. And there's opportunities to make money there. If the market fills the gap and doesn't bounce and starts to trade into yesterday's range, that's bearish. And there's opportunities there. So there's a lot of potential opportunities in the market today. And the reason I chose to go live to the public this morning is because I wanted to teach traders this conceptual idea that you don't have to know at the opening bell what the market is going to do, even on a gap day. You don't have to be able to jump in a trade first thing when the market opens. You can make money off of the market going up, the market going down, or the market going sideways if you wait for the market to tell you which of those things it is going to do. So for me this morning, right now, this is the moment of truth, okay? They pushed down trying to fill the gap, and then they pulled back up to the opening price, okay? If they pass through the opening price now, that means it's bullish. They are going to test the overnight high. I'll be looking for new buying above the overnight high. New buying will tell me that I'm bullish and heading up towards 6,005. If we don't pass back through the opening price, which is what's happening right now, if we get new selling, we're looking to fill the gap to get back down to yesterday's high, and then we do the same thing there. Do we get a bounce or do we get new selling? Right now, it looks like a gap fill. They are trying to get back to yesterday's high. Today's high is weak. So that means they'll come back for it later on, but for now, the momentum is down. Okay, so there is a poll in the chat. If you guys wouldn't mind answering the poll, I sure would appreciate it. Where do you think the market is going today? Up, down, or sideways? Let us know by answering the poll. Speak now or forever hold your peace. And lastly, please just remember we are live on the public YouTube. So if you could be ever so kind enough to smash that thumbs up button, give me that like. If you have not subscribed, subscribe to the channel. I would appreciate it. YouTube is punishing me. The algorithm is punishing me for not getting more activity from the chat lately. So let's try to get that activity up today. If you have any questions, comments, or concerns, say so in the chat or just say hello. Okay, this is a gap fill. We are getting more new selling inside the gap. So that increases the odds that we're heading to yesterday's high at 59.43. We will look for We will look for a bounce there. We will look for the market to find support at 43, and that will tell us what to expect moving forward. If we get a bounce in price and we reverse back up through the open, we have momentum and we're heading to the upside. If we start to spend time inside yesterday's range, we start to bring in volume, we start to get new selling inside yesterday's range, well, then the market is still pinned, nothing has changed, and we will first be heading back to repair the weak reference at 59.19 and then eventually tag 5,900 once again. Okay? So do we bounce at the gap fill or do we get new selling? The market wasting no time with this gap fill today. As of late, generally we've had a lot of gap and chops, but this is just a good old-fashioned gap fill. Very nice. Like very much. Okay, so that is the gap filled. Now I'm going to be turning off my Bookmap chart over here on the right so that I can look at my tick chart. The tick chart gives me an idea in a particular moment of what the momentum is. The fact that the ticks are so far above the zero line tells me we likely need to spend a bit of time grinding around here. We're not done with the selling yet. Once we get back to the zero line, I will know if we can bring in buyers for a bounce. But as of now, it is not looking bullish. We got a gap fill. All right, closing out the poll. Last chance. Make your voice heard. Let us know what you think. Where's the market gonna go? All right, 62% of you think the market is going up today. 24% of you think the market is going down today, and 24 think it's going sideways, and 13% think it's going down. That is a shock to me. I must be fostering a very smart community here, because generally when the market opens and it goes straight down, the chat will assume the market is going down for the day. That's funny. All right, guys. So we are now back inside yesterday's range. We are getting new selling, and we still have not gotten the ticks back to the zero line. So this now increases the odds we're heading for the week reference at 59.19. Same thing as I said with the overnight high. We will look for the same thing there. Do we just repair it and then reverse? Or do we repair it and get more new selling like we're getting right now? So you say to me, well, Charles, if we're back inside yesterday's range, why aren't you putting up the bearish banner yet? If you think we're heading down to 59.19, why not put up a big red banner and tell everyone that you think that we're going down there? Well, the thing that makes me nervous about my bearishness is the fact that the ticks are still above the zero line. I can't really trust this selling until it starts to sell below the zero line. Then I know it's real new selling. This right now could just be squeezing the overnight longs. So I'm going to need to see what happens when those ticks get back to zero before I can change the banner. But for the time being, 59.19 is in play. Jay in the house, good morning to you. He says it's a great day at the big casino in trading paradise. We got Carlo in the house. Good morning to you. Will is here. Zahir is with us. 200 dogs. Good morning to you. Archit is here. Sook, welcome. John is here. Ahoy. Willie T in the house. 7 Mile Reach says, hey, gap fill. That's a big yes, 7 Mile Reach. Nap, good morning to you. John Q is here. John Q says, just tell me where you want it to go and I'll handle the rest. Where do I want it to go? I'm completely indifferent. At this point, I'm okay with whatever it does. If we bring in buyers now and we reverse, I'll look to see what happens at yesterday's high. If we continue the selling, I'll be targeting 5,900. So it doesn't matter to me what the market does. Stephen is here. Good morning to you. John in the house. Welcome, welcome. John says, YouTube has 6 ways to Sunday to get back at you. I know, YouTube algorithm. It's tricky. DNK says, if you shorted the open, where would you keep your stop now? So if I was short the open, I would have taken either full profits or partial profits at the gap fill. When the markets kept selling off, I'd be looking to re-enter that trade. If I was in a short right now, at this moment, my stop would be above halfback. Okay. If the selling is going to continue, if the ticks are going to be able to get below that zero line, they should be able to stay inside. The price should be able to stay inside yesterday's range. If the price gets back above yesterday's high at this point, then you've completely reversed the momentum. Okay. So, we talked about this morning, which of the scenarios is more likely to be happening? Are we breaking out of this balance that we've been stuck in for the last 4 days, or are we still stuck? Right now, the market is saying we are still stuck. And that means the higher probability is that we're heading down to the VPOC from yesterday. But that would be disproven if the market were to get back up out of yesterday's range and we were to get some new buying. So if I was short right now, that's where my stop would be. Above the half. If I was a genius and I was doing everything right, the market opened, it pushed down. I was busy talking at the moment, but it came right back up to the open and then it rejected again. That would be the place to short for the gap fill. My stop would have been above the overnight high, and I would have had my first take profit at the previous day's high, my second take profit at the week reference, and my third take profit at the VPOC. Hard to do when you're in the middle of running a live stream at the same time, but that would have been the best way to trade it. And of course, when you got the gap fill, that's when you move your stop below your entry. And then you trail that stop the rest of the day. To bounce or not to bounce? That is the question. On a side note, the weakness of the market makes me feel like we are pinned, which means more balance. Why do I say that? The overnight high came straight to a gap fill and then ran out of steam. We opened this morning, another week reference, reversing right exactly at that gap fill level. And then here we did it right now at the low. We came down and reversed to a tick exactly at the week reference from yesterday. That's computers, y'all. That's the bots. Frito says, good Lord, I covered way too early. Better to cover too early than get stopped out. You know what I'm saying? Could be worse things in life. RK says, I faded the poll. Well, it would have been a successful move today. Cog says he's getting lag on the stream. Just do a refresh on YouTube, and that should get you back to real time. Michael is here. Good morning to you. John H. in the house. Hi, y'all. Annex is here. Welcome. DNK says, well, out for 30 points. Yeah, it's not often these days the market gives us this move first thing, without hesitation. Knapp says we got some exiting home sale numbers at 10. We will keep an eye out for some volatility there. Okay, so this is what we talked about before. We got the bounce in the ticks. Okay, so that's a sign that there were buyers waiting. They were just waiting for the market to go on sale to step in. We are still inside yesterday's range. We're below yesterday's high. So right now, we are bearish, assuming the market is going to come back down for these lows. But if we get back above yesterday's high, we can change our tune. We would need to see the market stay above there and bring in some new buyers up there. But the fact that the ticks held means the buyers have a chance to make a move out of here now. Again, the higher probabilities that they will fail and the market will head lower, but there's a chance. And so we're watching yesterday's high to see what happens there. And so you say to me, well, Charles, what if you got short at the open? The market sold off all the way down to the week reference. You put your stop above the high of the previous day. The market comes back up. It stops you out. Boop, boop. And then it heads lower anyway. Well, here's my answer to you. Welcome to being a trader, my friends. That's how trading works, right? If it comes up and it stops you out and then the selling starts again, get short again. Sure, you give up a couple of points of profit, but you can get back in a trade that doesn't work. To me right now, it's feeling like that's what might happen. They might just poke above yesterday's high and then reverse back in. It's shenanigan-y. Frito says, I got 12 points. Doesn't seem like much given how it shot out, but I came within one tick of being stopped out. So I'm not going to be too upset. That's the way to do it, man. I try to never worry about my gains. I try to never have negative emotions about winning trades. I'll learn from it if I could have, held for a few more points. But yeah, any winning trade is to feel good about, especially if you were, a tick away from getting stopped out, biting your nails, squeezing your butt cheeks. If you already went through all that pain, you might as well enjoy the pleasure of the win. Okay, so Man, this has been a lot in the first 20 minutes of the day, especially if you've never seen this channel before and you're trying to figure out what I'm saying here. Okay, so now things can flip. Things got bearish first thing this morning, particularly when we started to get new selling inside yesterday's range. But we got a bounce on the ticks, which means buyers stepped in to defend that sell-off. Okay? So now we find out at yesterday's high whether these buyers trying to defend, trying to flip the momentum of the day, do they have success or not? So if they can now start to turn yesterday's high, 59.43, into support, then those buyers take control and we look for another move to the upside. If they cannot and they fail and we start to pull down again, then we are bearish to repair the low and continue lower. So the buyer stepped in. Can they hold it? Dun dun. Ebb and Flow says it is better to be late on a trade than be stopped out on a retrace. I learned that the hard way. I agree. You can go too far with it, though. That is something I struggled with for a little bit, where it was like I became obsessive about only taking trades when I was absolutely sure that the trade was going to work, and like waiting. And suddenly I realized it's like I am missing so many opportunities. So it's a fine line. You got to take risk. You got to step in and take trades. And if you get stopped out, you may have to re-enter that same trade after the stop out. But you got to take some trades. You can't take it too far. But I do completely agree with the conceptual idea. Okay, moment of truth for the buyers. Can they hold it? No, they cannot. Okay, so I am officially bearish. Looking to pass back through 59.19 and then head to 5900. I will know I am wrong on my bearishness if we get back above this node we just created right here at 59.48. Okay? So this should now become resistance and start smacking the market down. If not, if the market pokes back up through, well, then I'm just wrong on my call and we're heading higher. But I am not seeing the support I would have liked to have seen at the previous day's high, which is bearish. So we are once again bringing those ticks back to the zero line. Remember, the zero line is measuring are more people, are more stocks in the S&P 500 going up or going down, right? So if we get back to that zero line and the market starts to push through it to the downside, that means at that moment, there are more stocks going down in the S&P 500 than up. Okay, which would be bearish, right? If more of the stocks are going down, the futures are probably going to go down. If we get another bounce, we're looking at a very choppy sideways initial bounce like yesterday. If you recall, yesterday we had a large initial balance that was very choppy, and then we spent most of the day inside of it. That's what we're getting into here if we're not going to get any follow through. So I'm looking for these sellers to smack these ticks down below that zero line, or it's going to become a chop fest. Sell some stocks, y'all. Good morning to Will, Black Swan, David M, Billy K, Big Pun says, that's a great example disproving the stupid theory your broker is hunting your stop. I'm not sure what I said to trigger you to say that, but no, your broker is not hunting your stop. Your broker doesn't give a shit about you. Sorry, hate to be the bearer of bad news. If you find that you enter trades a lot and you get stopped out, you frequently get stopped out, and you feel like the minute you put a stop in, that's when the market moves to that level. Your problem is that you're a laggard. You're getting into the trade at the wrong time. It is crazy how many traders have seen a humongous change in their results by simply changing one rule, which is whatever trade you would normally take. And this is only if you get stopped out a lot. If you find you're constantly getting stopped out of trades, from now on, just start putting your entry where you would have put your stop, right? So if you're shorting, right now with a stop above the previous day's high, and then it pokes up and stops you out, and then it heads lower, next time, just put your entry at the previous day's high and put your stop much higher. And you'll instantly see an improvement in your results, because it changes where you enter the trade, in the auction process. Okay. Back at that zero line. What's going to happen with these stocks? Are we taking this market lower or what, ticks? You tell me. John H says, I'm up 26 points so far. Going to sit on my hands and wait for the real setup. I'm fully in support of that. We are now in a place with the market where it is feeling very choppy. We got a weak high. We got a weak low. We got the ticks bouncing on the zero line while price is going down. So we got a lot of mixed signals here. If you're flat and you're feeling good, there's no reason to force a trade. If you are going to force a trade, though, you know what direction I think it should be. Design knob. Sorry to hear that, brother. SC says ticks are still high. They're bouncing. They're not high. They are bouncing. So what does that mean? It means every time the market dips, buyers are buying the dip. And that's fine. There's nothing wrong with buyers buying dips. The question is, will they keep buying those dips? Or are they going long and putting their stops below the low and creating a pocket of liquidity for the market to target? Let's find out together. Right now. Willie T says, Charles, can you explain the spike at the end of the day yesterday and its relevance? So, yes and no. I didn't really give the spike yesterday much relevance personally because we're in a balance area, because we're in what we're now calling balance by pin, this sort of artificial keeping the market in exact areas. It's just a new norm. This is what the market does now. Because of that, I'm not putting any, I'm not putting too strong of a lean into signs of momentum, right? A spike up, a move in the last hour of the day, that is a sign of momentum. But you can't really trust that when you're inside a balance area. You know what I mean? Like, it's just like, is that really bullish? I don't know. So at the end of the day yesterday, I was not bullish. I was completely neutral. When I woke up this morning and saw the gap up, I saw, okay, opportunity to get bullish if we can get a gap and go, which of course we could not. So that means more balance by pin, more artificially keeping us locked in place. And so you say, well, Charles, what are the signs to you that the market has been balancing? Well, we had an inside day where the market stayed completely inside the previous day's range. Then we had an engulfing day where the market engulfed the previous 2 days' range. And then we had another inside day inside of that. That is a market imbalance, my friends. No question about it. No one's in charge here. Buyers and sellers are in competition. They're fighting to see who can win. Can the buyers break us higher? Can the sellers take us lower? Right? That's what's going on now. So at the end of the day yesterday, I wasn't too focused on that spike up. And actually, technically, it wasn't officially a spike because you would have to close above the A period high, and we closed inside of it. But yeah, this didn't really mean anything to me because the market's in balance. But like I said, the gap up this morning meant something. It meant we could break out of balance, but we didn't. And so the chop continues. Another day of balancing. I'm so sorry. I just did that to you guys. Apologize to your ears for me. Thob says, the large base of the A period lets me know that we have a choppy session ahead for most of the day. I think that's fair, right? Look at all this time and all this volume that we brought in inside of here yesterday. That's a lot of chopping around. Look at all this time and all this volume we brought in here in the overnight last night. That's a lot of chopping around. And then look at what we've done so far today. Bringing in volume and spending time here again. So to assume we're going to get some more chopping around makes sense. Again, I just want to emphasize my target is 5,900. Even if it is a crazy, choppy gnarly trip to get there. As long as we're below 59.49, the highest probability is that we're heading to 5,900. I can't tell you if we're going to get there in 5 minutes or 5 hours, but I can tell you that's where the market wants to go. I would just really love these ticks to stay below the zero line. These bots are buying every dip. Big Pun says earlier his comment was in response to someone in the chat mentioning that they were one tick away from getting stopped out. Yes. And I will tell you that is very common for me as well. There are many times that the market will move like within a tick or two of my stops. Same thing with my take profits. A lot of times I'll have a take profit level and the market will come literally down to like one tick above it and then reverse. So believe me, it's not the market, trying to stop me out or trying to stop me from taking profits or whatever. It's just when you start to get very good at recognizing reversal levels, sometimes you're, just one tick too early. Look at that. Another bounce exactly on 59.19. Okay, so what does that mean? It means short term, we expect the market to push away a little bit, but this has now become a poor low, increasing the odds the market will come back through it. But these computers, beep boop, they're trying to defend. Design Knob talking about his loss today. He says, I assumed it was going to be a gap and go. The only gap was in my rear end. Wait. Oh, I see. Oh, okay. Sorry. It took me a second. I get it now. Yeah, on a gap and go. There's two ways to approach a gap and go. One would have been to straight up just buy the gap fill, right? To have your limit long order in there so that when it came down, you're getting into that bounce. The other one is putting a stop buy at the opening price for when the market comes through. There was a way this morning because it came right up to the opening price and then reversed. You could have been filled long and then it instantly sold off. And that would be a very uncomfortable position to be in. Because all you can do is put your stop down inside the range and eat the loss. But generally, one of the great things about gap trades, both gap fills and gap and goes, is that you don't have to take on a lot of risk. You know what I mean? If you're looking for a gap fill, you can always use the highs as your stops and your take profit is the gap fill. On a gap and go, you're using the previous day's range as a stop, looking for that bounce in momentum. So the point is, wherever you enter, you have tight stops, you know? So you can't lose your ass. But you know we love you, Design Knob. We support you psychopathically. Frito says, I think it's like the third time this week I was a tick away from getting stopped out. And there are other times where it feels like they always stop me out to a tick and then reverse. Yeah, that's not the market paying attention to Frito's individual orders. That's Frito learning to read the market and recognize reversal levels with a very exactness. So it's not just Frito who's getting stopped out there or whatever. It's, you know, thousands of traders because everyone's putting their orders there. John George, these bots are making me thirsty. Ken says, can we take a look at the Q? Yes, let's do that. Let's take a look at the NQ and see what's happening. Oh, whoa, boy, 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 boy. All right, NQ. Definitely still in balance. So exact same thing as the ES. You got a balance area the last few days, and they are back in the balance now. They made the trip all the way to the overnight low, so they could run out of steam here. But if the momentum to the downside continues, then the target becomes yesterday's low. Or I would say 20, like 5.15, this area right in here. But this may be it. You know, the fact that they got back to that overnight low, they may run out of steam to the downside on the Q here because that's a big move. For less than an hour. John says, Charles's course has a Dr. Phil chapter. Oh, that's funny. It's kind of true. Frito says, the market makers aren't hunting my micros, but sometimes the micros go a tick or two beyond the minis. That is true. And that is a thing that is frustrating. It's like sometimes the ES will reverse at, say, 59.42, but the MES will reverse at 59.42.50 or 59.43. And then it's like, shit, if you were looking at the ES and you placed your stop there, you may get stopped out just to a tick. Okay, so round 3, ding, ding, ding. They have thrice now defended that zero line, meaning buyers are buying dips, but again, getting nothing for it. They still can't get above yesterday's high, so it's still bearish right now, and the higher probability is that these buyers will get squeezed and we'll get another push to the downside. as I said before, I will remain bearish below 48. So they can poke up there, but as long as they come right back down, I remain bearish. Because buyers are buying, they're going long, but the price isn't really going up. And how much longer are they going to keep buying if they're getting nothing for it? One of these dips is going to shit the bed once they get squeezed. Casey says this room is fun. Thank you, Casey. Appreciate you. Sook says the banner is confusing me a lot. Don't be confused. As long as we remain below 59.48, I think we're going to 5,900. As I said, I don't know how long it'll take. I don't know how much will go up and down before there. I assume it's going to be very choppy because we're inside of a balance area. And that's what the market does. It chops, it grinds, it reverses. Look at what it did yesterday. Over and over and over and over and over and over. And in the overnight, over and over and over and over and over. But that's not my concern when I'm talking about my bias for the day. My concern is, were we breaking away from this pin today, which we would have done if we got a gap and go, or were we going to remain pinned? Which, again, if we're going to remain pinned, I can't tell you how long, but this is where we're going. Sooner or later. Might not be till 3 p.m., but this is where we're going. So I am less confident in this bearishness than I normally would be because of the ticks, but I do remain bearish below 48. Does that make sense? So buyers are stepping in. I shouldn't be bearish when buyers are stepping in, but I don't think they're going to win the tug of war. I think the sellers are going to win. We shall see. Big Pun says, I've recently heard a YouTuber on a sim-funded account whose trades aren't even hitting the tape, claiming market makers are hunting his stops. I know this is going to be a strange thing for a guy on YouTube, who's talking about trading to say, but don't listen to anything that guys on YouTube who are talking about trading have to say. I spent many, many, many years listening to other traders and their opinions and their systems and their strategies. And it wasn't until I stopped and I started focusing on my own thing. What do I see? What is my brain telling me? What works for me and what doesn't work? Once I started to focus on that, then I started to have success. Red Pole says, can you explain why you think the sellers will win? Because the gap fill and continuation? Yes. Okay, so let's rewind it back, right? Let's rewind it back to the close of yesterday. What was I thinking at the close of yesterday? I was thinking this market is in balance, right? I was saying we got a range here and we're stuck inside this range. And so until that changes, my assumption is we're going to go down to the lower end of the range and up to the higher end and down to the lower and up to the higher. How we do that is tricky, right? Some days we'll open and we'll have a massive gap and then we'll just rotate at the upper end. Other days we'll slowly melt lower and then we'll reverse back up and go sideways in the middle. You know, some days we'll go sideways for a few minutes, push up, go sideways for a few minutes, and then spike up at the end of the day. You know, how we get from one end of balance to the other end, that's tricky. But what I can know is as long as we are still in balance, the highest probability is that we're heading to the opposite end. That I can know. So that's last night. Market closes and I'm saying we're still in balance. So I'm expecting more balance. I'm expecting us to head to the opposite end. So then the market opens this morning with a gap up. Okay. So now what am I saying to myself? There's a chance, and that's all it is a chance. Nothing comes with a guarantee in this business. There's a chance we could break away from this balance, right? That we could start to make our next move to the upside. So for those of you that don't know what I'm talking about, let's just rewind the market a little bit. Here's a market imbalance. Here's a breakout of balance. Here's a market imbalance. Here's a breakout of balance. A market imbalance, a breakout of balance. A market imbalance, a breakout of balance, right? So if I'm saying to myself this morning when that opening bell rings, is this it? Is this the breakout of balance? Is this what's going to get us that momentum to the upside? What am I looking to see? What will confirm that theory, that thesis? Well, we should have either opened and immediately started to trade higher, or we could have come down and filled the gap, but there would be good, strong hand buyers waiting to buy the previous day's high. And then we get to move. The fact that we didn't get either of those tells me, and again, I'm not talking about intraday over the next hour. I'm saying bigger picture, we're still in balance. And if bigger picture, we're still in balance, what is the most likely thing that's going to happen? We're going to head to the opposite end of balance. So if I'm looking for a trade and I'm looking for a place to take profit off of that, what am I looking to do? Well, I'm looking to get short as long as we're still in that balance area. And I'm looking for a place to take profits that has a high probability of filling. This is the way. All of this and more taught in my mastery of Markets and Minds workshop. marketsandmind.com. So here we go again. Ticks back at the zero line, market back at support. Do we get another bounce? Does the chop continue? Or is this the time we squeeze those buyers? Right? They bought in the A period twice. They bought in the B period. Are they going to buy again? And if they've been buying, if they've been going long in here to keep bouncing and bouncing and bouncing, where are their stops? What will happen when we get to those? It's liquid. You guys know. River Rock says, I think we are consolidating sideways to higher for the Thanksgiving rally. There's a Thanksgiving rally? Well, that's dope. Yeah, I would say once we break out of this balance area, we could break either way. And if you made me guess right now, I think we will break to the upside. That all-time high is weak and wants to be tested again. But as far as today is concerned, we're still in balance. We have not begun that rally yet. And again, that's what I'm talking about. If we were going to, if today was going to be the day, yesterday's high should have become support. Big Pun says, what was the indicator in the bottom window of the Bookmap chart? That is the delta, right? Cumulative volume delta. I'll be totally honest with you. I don't spend a lot of time looking at this. I took it away from the chart for a while because I don't use it. And then people in the chat asked me to put it back. But it's basically just calculating cumulative. So combining all the sellers and all the buyers. Are there more sellers or buyers, basically? And this is kind of the chop that we're seeing, right? So the futures market has more sellers, right? Stepping in. They're selling and they're selling and they're selling the futures. But the ticks, which show us the underlying shares, the actual stocks in the S&P 500, they keep buying. They keep defending. So you've got futures traders trying to take the market lower, but people are using those dips to buy stocks. And so what do we get? Freaking chop. Chop and broccoli. GeoCap says, Charles, where do you enter and where is your stop loss? As I've said, if I'm taking a trade now, I'm shorting because my bias is bearish. I believe the higher probabilities that the market is going down than up. Where am I shorting? In resistance, as close as I can get to my stop. Where is my stop? Above 49. I said it a bunch of times, guys. As long as the market remains below here, I think it's going down. So my stop is above, and my entry is wherever I can get it at whatever moment I'm entering the trade. If this is the best resistance I can get, I'm getting in there. If I think I'll get a move back up to halfback, I'm getting in there. I'm getting in as close to my stop as I can, and my stop is wherever my thesis is wrong. It's liquidation time. Come on, y'all. It's liquidation time. So, oh, look at that. Out of nowhere, the market starts to fall very fast on very thin volume. Boop, boop, boop. Here we go. It's just falling out of nowhere. Guys, how could we have predicted this? Well, we could have been watching the ticks and saying, these buyers, if they don't get what they're expecting, they're going to get squeezed. This right now is them getting squeezed. This is those stops getting taken out from the A and B period buyers. It's liquidation. Liquidation time. Okay, so at this point, I'm going to treat this like a trend. We are not technically trending yet. The C period needs to get 2 letters below the B period low to officially be trending, but I am going to think about it as a trend from this point on, which means for the market to continue lower, they have to stay below the B period high. If they get 2 letters above the B period high, then the momentum is clearly over and the market's either going to go sideways or higher from there. As long as we remain below that B period high, though, my assumption is the sellers are in charge and they're going to be looking for places to get short. So I'll be watching for resistance. As long as I keep seeing resistance, I should assume the market will continue lower. All day long, all day, until cessation. All day long. Frito says, I feel like there has to be some kind of options trade called the gobbler. Oh yeah, the gobbler. Of course. That's where you go long a call that is 50 points out of the money. You go short a put that is 200 points out of the money. You go, you buy a call that is, yeah, I know what you mean. David says, how do you find your line in the sand at 48? Well, again, guys, it's all conceptual understanding of market structure, right? So the first thing is yesterday's range. This level right here is a very important level because this is where minds are changed. When we're above it, people are getting bullish. Oh my God, we're higher than yesterday. And they're going long and they're getting excited. When we're below it, they're like, oh no, we can't go anywhere. We're going to need to pull back. And they're bearish. So this is the important thing, is the previous day's high. Now, I wish markets were so simple as to they always go exactly to a perfect level and then you find out what you want to find out, but they don't work like that, right? They often push through these levels and kind of dance around them for a little bit, and then they make whichever break they're going to make. So I'm saying to myself, okay, the level is the previous day's high, but I got to give it a little bit of breathing room. I got to let them poke up a little bit above the previous day's high before completely changing my bias. So then I see this node right here. It's hard to see now because we've traded so much volume below, but earlier on in the day, this was a red candle. So at the time that we were here in the A period, this was a large volume node. And so that to me that's where the end of the line is. I can let them poke a little bit above yesterday's high, but if they poke above and get through that large volume node, that's new buying. And that means my thesis is wrong, that we're staying inside yesterday's range. So I can't teach how to pick these levels exactly. It takes practice. You got to just watch the market and learn. But it always starts with a story that I'm telling myself about what is the market doing right now. Is it trending? Is it balancing? Are we in a tight range? Are we in a wide range? Is there a lot of volatility or a little? What is the tempo, right? I'm telling myself a story of what the market is doing. Inevitably, There's got to be a level somewhere on the charts that tells me that story is wrong, right? That tells me what I think is happening isn't happening. Those are the levels I look for. What tells me my thesis is wrong? Okay, so we are pushing into the base of the B period single prints right now. That is the first potential resistance level to smack the market down. If that doesn't smack the market down, the next resistance is this high volume node here at 24, 59.24. After that, 59.36. Remember, the sellers are in control. So now the higher probability is there will be sellers waiting at resistance levels. And so we're watching them to see, do we get smacked down? Do we get resistance? If we see resistance, our story is still true. We are still one time framing lower. We still have momentum. We're going lower. If we start to blow through these resistance levels and there's no sellers there, well, then our story might be wrong. That's the auction process, baby. Man, these ticks are insane. I don't think I've ever seen such bullish ticks on a day where the market is going down. Somebody is buying stocks. Somebody is accumulating. I'm telling you. That doesn't mean anything for intraday today, but just over the days ahead, make note. Somebody is accumulating stocks. They are buying every dip. River Rock says, amazing day. These pumps and dumps are not for the weak. Yeah, I would agree. This market is no joke this morning. It is just chewing people up on both sides. But, of course, that's what markets do when they are in balance. River Rock says you should put up another poll. It's going to be inverse of the last poll. I can just tell you. All right, folks. So from this moment, we are literally in the middle. We are at 59.25. So let's get another poll going. Which level do you think is going to get tagged first? 59.50 with a 25-point move up, or 5,900 with a 25-point move down? Do not be swayed by my banner, y'all. I want to hear your opinion. With your way of looking at charts, what you're seeing, which level do you think gets tagged first? It's anonymous. Nobody knows what you vote for. So vote the truth. David J says, what is your course and is it helpful to a new trader in the future markets? It's a great question. So what is my course? Mastery of Markets in Mind is what I call it. And I got one coming up in January, beginning of January. So what is it that I teach? Well, I teach you how to be a trader, how to think like a trader, how to operate as a trader operates. A lot of people, when they teach people trading, is they think, I'll just teach you my setups. I'll just teach you, this is where I enter trades. This is how I take stops. These are the things I look at. Where I think that fails, and the reason why I think so many people struggle with trading is a very case-by-case, person-by-person, individualized thing. There is literally a million ways to skin this cat. And the trick is you will only have success if you find the way that is right for you. And you are unique from everyone else. So you might get lucky and find somebody that will teach you their system and it just happens to fit for your personality. And then you have success. But most people who teach trading, 90% of their students fail. Because 90% of their students just aren't like them. They just have different personalities. And so what I try to teach is how you figure that out. What is your personality? What is the best approach to trading that you should be coming at this with? You know, how do you choose the market to trade? How do you choose your position sizing? How do you choose what types of trades you take? Are you taking scalps? Are you taking longer term trades? Are you doing both? Are you trading in options? Are you trading in futures? Right? So it's that's why I call it mastery. It's an all-encompassing course that just teaches you how to understand what you should be doing every day as a trader. How do you improve? So, of course, I teach all my setups. I'll teach you all the ways I enter trades. But I don't think that's what's going to help you. What will help you is me teaching you how to think like a trader. And I'll just give you the free version ahead of time. It is make plans ahead of time, monitor the market generated information in real time, and take action without hesitation or reservation. And then at the end, go back and study what worked and what didn't. Going through that process over and over again, that's what will lead to success. Okay, so the poll, not so helpful. 56% to 43%. So a little more biased to the downside, but this is kind of what you would expect in the middle of a chop zone. So we're asking ourselves the question. We believe there's momentum to the downside. We believe the market wants to head lower. Okay? And we're asking ourselves questions to confirm that belief, to say, yes, we are right. This is what's happening. What is the first thing we are looking for if we have momentum to the downside? The ticks to be below the zero line. They are not. So that's a mark against the bearishness. Okay? What's the next thing? We're looking for the market to get smacked down at different resistance levels. The first one was the base of the B single prints. The next one was this node right here. And then we're pushing into the third one right now. No resistance there, mark against bearishness. No resistance there, mark against bearishness. Okay? If we get resistance now and those ticks get smacked down, we're still bearish. We're still thinking that move is going to happen. The final mark against the bearishness is if we get above that B period high. So I will remain bearish anywhere inside this B period, at least for the next 12 minutes. But I am starting to get signals that this may not work, that this market might need to chop sideways for a while before it goes lower. So let's see what happens. I am still bearish. And so this is what I teach when I teach my workshop, is how to read a market and kind of figure out what's happening and then know how to know if you're wrong. Because when what should happens doesn't, when the market should have ticks below the zero line and it doesn't, the market should be getting resistance at resistance levels and it's not, that is valuable information that you can carry forward. And maybe you even lose money on the trade, but you'll do better the next day and the next and the next, because you're learning and growing and developing your skill set as a trader. That's what being a trader is. Okay, final major resistance right here between 37 and 39. I do suspect the sellers are going to smack the market down right here, because if they don't, the buyers will take control. Design Knob says, if you go with the trend, you lose. If you counter the trend, you lose. You're wrong, my friend. Going with the trend, you will win way more often than you will lose. The trick is, when you win big. When you lose small. So for example, if you're shorting right now with the trend and you're using this resistance level to get you short, you're only going to lose 10 points. A little less. Actually, a little more, 12 points. Okay. If you win, and let's say you're targeting 5,900, you're going to win 35 points. Okay. As long as you do that every time, as long as you lose 14 points and win 30 over and over and over again, you will be profitable. This works best if you trade with the trend. You can do the same thing fighting the trend. You could have been longing all the lows each time as well, same theory, but you will have more winning setups that work in your favor if you're trading with the trend than without. There is no setup that works 100% of the time. So you must accept that loss will be part of it. And the goal is to keep the losses small and the gains big. If every trade you take is like that, if you're always going to win way more than you would lose, you'll have a much better outcome. Matter says, you didn't used to teach trade setups. Has something changed in that respect? Yes, I started teaching trade setups. I just got tired of people arguing with me about it. I would have students that would tell me, if you would just teach me your setups, I just need your setups. And so now I teach them. And as I said, for 10% of you, you can trade my setups exactly as I trade it, because your brain works like my brain. But for the other 90% of you, you should not be trading how I trade. It's not right for you. But I will also teach you how to figure that out and then come up with trade setups that are right for you. A great example of talking about differences in personalities. Earlier I got bearish in the A period here at the previous day's high. The market came all the way back up in the B period to that same level. And then somebody made a comment in the chat. They said oh, well, this is confusing the way the banner is bearish, but the market is going up. Well, the way I trade with my personality, that's totally fine. I'm happy to get short and wait 4 hours for the market to go where I think it's going to go. And I don't mind if it chops and chops and chops and chops over that 4 hours. I don't care, how many times it goes up and down and up and down and up and down throughout that time. As long as I'm not stopped out of my trade, as long as I can stay in the trade, the time that it takes for the trade to work out doesn't bother me. Okay, so speaking of which, it looks like this trade isn't going to work out. It looks like I'm about to get stopped out here because they did not hold that resistance. But that's okay. As far as my trading is concerned, I'm fine with getting in a trade and waiting 4 hours for it to make the move and having it go up and down and up and down and up and down and up and down and up and down in that 4 hours, because I know I'm going to lock in a lot of gains with a little bit of risk, right? Whereas some people, they need to get in a trade and have it work in the next 10 minutes. They need that trade to work immediately. And that's okay. You can trade. It's called being a scalper. You can look for those type of setups. But for me, I can't trade like that. I can't get in a trade, have it work out, get in a trade, have it work out. It's too much effort, right? It's too much thinking in my mind all day, every day. Am I in? Am I out? Do I do this? Do I do that? I prefer to just sit back, relax, wait for the information to tell me what to do, and then sit back, relax, and wait for the trade to work or not. And sometimes they don't. This will be an example of a time it doesn't. There it is. Cessation. All right. No longer bearish. Back to neutral. Okay. So this is an example of how trading works. Right? As far as what I expect for the rest of the day today, I feel like we are still in balance. I feel like we are still coming back down for this poor low, but I don't want to be short right now for it, right? Because if we were for sure going to come back and take out that C period low, we should have turned one of these levels into resistance. That's what should have happened. And we should have stayed below that B period high. And so since what should have happened didn't, it means what I think is happening is not. Okay? So that gets me back to a neutral stance where I'm uncertain of what is happening. So now I need to wait for more information to figure out what comes next. I'll tell you right now, that information to me is still yesterday's high right here. So if we can now turn what was resistance earlier into support, I can be bullish for a move back through the opening price. Okay? But not yet. I got to see it become support. I got to feel very, very confident because the fact that futures have been going lower all day while stocks have been getting bought up just sets us up for chop. So I am back to a neutral stance, waiting for more information. And if I got short here, and I got stopped out up here, and I took on a loss, and I let the market go up, and I let it come down, and I let it go up, and I let it come down, and then I'm finally convinced, okay, we have support, and I enter another trade, and that one works out to get me through the opening price, I will have paid for my losses, right? And I'll have a bit of a gain. And so that's what you do all day, every day. You make a theory about what the market is doing. You come up with your levels where you find out if you're right or wrong. You enter your trades with the minimum possible risk. And when you get stopped out, you look for the next opportunity to make the money back. Not a revenge trade, not a reversal, right? A sit back, relax, wait for more information, wait to feel confident. But that next trade should pay for that last one. And if you do that every day, day in and day out for years, slowly but surely, you will compound interest. Let's take a quick look at the NQ. Yeah, both markets are just in such a choppy place right now with, divergences between the ticks and what's happening with price. That is just a sit back for a little bit and let them chop it up kind of market because there's no great entries here. Technically, you could short the NQ literally right now with a stop above the B period high. But the fact that the ES was able to blow through the B high would make it so I wouldn't want to take that trade. But you could technically do it if you felt like gambling. Nap says 62-point initial balance like yesterday, rotational. Yes, to me, that's what it feels like right now. It feels like it's going to be like yesterday. And we're probably stuck inside the initial balance the rest of the day. As I said, if they can turn 59.43 into support, which they have not done yet. It has not been tested. If it comes back down and it turns that into support, then I could look for a trade to head back up to the opening price. But other than that, I don't see anything right now. And it does look like it's going to be a very choppy sideways day. Yeah, and the ES on 2 ticks did break that low. So that's it. That's the sign of rotation right there inside the initial balance the rest of the day. John says the ES heat map is green with only the big 7 in the reddish. Yeah, like I said, somebody's buying stocks. The fact that the ticks cannot stay below the 0 line all day. Market's been going lower all morning, but the ticks can't stay below the 0 line. Look at yesterday. They spent most of the day below the 0 line. You know what I'm saying? It shouldn't be that hard to stay below the 0. So somebody is buying stocks. Which is bullish, you know, on a swing basis, it increases the odds we're going to break out of this balance. That we're going to break out of this balance to the upside, but it doesn't mean the balance is over. And I don't think it is. I think we got another day inside this range. Cog says it could be a repositioning after NVIDIA. I would say that could, you know, NVIDIA earnings last night, that could have something to do with it, but I don't think that controls the whole market. Tough to say. Tough to say. Danny G says today is brutal. Today is brutal. I picked the wrong day to go live on public YouTube. It's just a day where the market is giving us so many mixed signals. But that's trading. We can't choose the market, you know. We get what we get each day. All right, guys. Well, with that, I'm going to call it quits here on the live stream for the day. Thank you so much for joining me. If you're new to the channel, please do consider subscribing. If you have not hit that like button, now is an excellent time. There's 106 people hanging out, but only 60 likes. So this is a great time to say thank you, Charles, even though I was wrong, by smashing the thumbs up button. And then if you felt so inclined, you might even share this video in your favorite chat room. You know, if you're in a Facebook group or you're on Reddit or you're in a Discord, you know, you might tell your friends, hey, this guy Charles is pretty cool. Check him out. As far as what to carry forward for the rest of the day, I do feel like it's going to balance. I do feel like it's going to be very choppy. So that is certainly something, you know, to take into account. If you're entering trades, wait for your entries. Don't force them. Don't, jump into trades immediately. Wait for it to come to whatever your support or resistance level is. And then don't fall in love with trades. Take profits quickly. Get out and move on. As I said, and it's a giant if at this point, if they can turn yesterday's high at 59.44 into support, the way it was acting as resistance in the B period, okay, if now in the D it can become support, then we could break higher today. And in which case we would, stick with that momentum as long as it lasts. But I don't think that's what's going to happen. I think we're going to fail and go sideways. Good luck. Happy trading. And we'll see you all in the Brigade stream tomorrow morning. If you're thinking about joining the Brigade, there's a link in the description. Only costs $10. Love to see you there. Thanks, guys. Bye.